Hey folks, this is your host Mandeep. It is Saturday, June 26th, and I will address a commonly asked question, which is how to use option flow for day and swing trading. In fact, I'll take it another step further and demonstrate how I combine option flow with the ultimate trading strategy to find high probability trades. So in this video, we'll look into specific examples from Friday where Flow gave us actionable trades in conjunction with the technicals. And we will look at three specific trades. The first one is Virgin Galactic SPCE, the second one is BABA, and the third one is Expedia. And I'll also show you exact entries and exits on these trades and how can you incorporate this method into your trading arsenal. Now, before we get into specific trades, let's just take a look at the general characteristics of actionable option flow as I perceive them. Now, everybody's mileage is going to vary. Now, you can trade using many different methodologies, right? You can trade on fundamental data, you can trade on technicals, you can trade on specific chart patterns, candlestick patterns, option flow. But for today's discussion, let's focus just on option flow. So now option flow is essentially a technique to track smart money, mostly institutions or algorithms where an inordinate amount of capital is being put into work. Now there's a likelihood, but not certainty, that they have access to some information that common people don't. They could be better informed, for example, about an impending news, a buyout possibility, or it could be some other news of consequence. As an example, they may have some inside information if FDA is about to approve a specific drug or not. Again, this is not all certainty, right? So this is, again, you're trying to stack the probability in your favor, and you also realize that sometimes they're speculating just like we are. So what I've done is I've put together this list which you can use for looking at what makes an actionable option flow. So the first one we talked about, which is option flow, is basically a method to track smart money. The second topic to look into is that there are a couple of different kind of flows. You have blocks, splits, and sweeps. So blocks happens when there's a negotiated transaction between parties, and split happens when, let's say, a number of retailers are buying options, and they are actually reported as one single transaction, right? Because they percolated up and reported as a single transaction. But what we really are concerned about is what we call as sweeps. There are 16 exchanges within the United States, and sweeps happen when somebody, most likely an institution, is trying to get hold of as many options as possible, and they also want to keep it under the radar. So they, instead of buying it from us, single exchange, they sweep multiple exchanges, right? So not only that, keeps it under the radar, but it also shows urgency on their part, right? So they're trying to get their hands on as many options as possible. So that's the kind of action that we are interested in when it comes to option flow. The other thing we want to look at is that these options are relatively, short dated. So they're a few weeks out, and what we're trying to do is look for like quick moves to happen. Of course, in this case, we're trying to take advantage of day trading. Now, of course, it'll happen when they're buying through the day, or this option buying continues sometimes for days and weeks. Those are the kind of things that you want to focus for swing trading, because they're most likely dated several months out. There could be leaps, and I'll show you one example of that as well. Finally, you're looking for these wise guys or these smart guys that they're relentless in their purchase of their sweeps. So it's just like, it's not just one or two transactions that happen, but you will see a host of transactions that are happening one after the other, and eventually, once you're tuned into this method, it'll become second nature, and just by watching it, you'll realize that this is something that's actionable versus something that's not as actionable, right? The other thing is that when you see sweeps that are leaps or much longer term, then those require a bit of patience, and they're less likely to work on the same day. Doesn't mean they can't, but it's less likely. Finally, no matter you will never understand or know what the true intent of these purchases are. Are these directional bets? Are these hedges? Somebody could be short, millions of dollars of a particular stock, and they may buy call options to hedge themselves, or there could be other synthetic trades that they have placed, and you will never know. And the only way you will know is if you're able to talk to that person and truly understand the intent of it. But the bottom line is you really don't care, right? Because for that you need to understand what the mechanics is of an option trade. So, for example, when somebody buys an option, right, the market maker is supposed, in order to keep the market, fluid, right, they need to sell them the options, and when they sell them the options, they are delta negative, right, and if the stock is rapidly moving against them, what they do is they go and buy stock from the open market in order to, stay delta neutral, right? Because they make money basically on the difference between the bid and the ask, right? And they're just essentially keeping and maintaining the liquidity in the market, right? So when the market maker now goes out and buy these options in the stock in the market, it causes like an immediate acceleration in the in the stock price, and that's something you will notice once you start seeing these repeat option flows that happen. Okay, so the bottom line is, even if somebody is doing it as a hedge, right, the end result is still the same. So since they're aggressively buying these call options, it's driving the price of the stock higher, right? The flow is a technique that you can add to your current arsenal. What I mean by that is, some people trade entirely on, option flow or dark pools and other methods. What I tend to do is I take option flow and tend to combine it with the strategy that I've developed, which a number of you who've been subscribers to my YouTube channel know, that we trade a strategy called the Ultimate Trading Strategy, which essentially gives you automated buy and sell signals. And when I see a signal generated along with option flow, I basically pay more pay more credence to it, or pay more attention to it, and so on. And then can call flow be used for day trading? The answer is a resounding yes, and I'll show you a couple examples where you can use it for day trading, because it just causes a huge spikes in the price of the stock. And finally, you have to manage your risk, because no matter how good the option flow looks, any trade can go against you. The market could, they could be selling futures and the market turns against you, or this could purely be just a speculation, just as we do sometimes, right? So it's very important that no matter how good the flow is, how compelling it is, you always need to adhere to your stop losses, whatever they may be, right? And that's like a topic for another discussion of how to manage your risk on these trades. So bottom line is, the option flow is definitely another tool that's going to help you to stack the probability in your favor. Now let's take a look at a few examples. And the first I mentioned, we'll look at 3 examples and see whether they meet these characteristics or not. So SPCs, which is Virgin Galactic, was the one that was showing inordinate amount of buying, and that started right off the bat. As you can see, at the market open 10 minutes later, they were buying SPCE calls, and these were relatively short dated, right? So it's June the 25th, and these guys are buying options that were expiring like a week or 2 weeks out, right? So you can see most of them were like for 7-2, and they were hitting 49, and they were hitting 60, 60, 60, as you can see, with the same date. So that meets that criteria that I talked about, that the option flow has to be short dated, right? And they're targeting the same expiration date and the same strike price. So it met that criteria. And the buying obviously was relentless, right? As you can see, they were buying like every couple of minutes there was a buy, and this continued all the way to 2:15 p.m. Pacific Standard Time, right? So I basically saw this flow, and then I'll show you a couple threads on our Discord room where So two things happened. First, I already saw a buy signal here. It says buy to open. So that buy had already triggered on SPCE, and then on top of that, we had this flow that was occurring as well. And so I've mentioned that 55 is definitely a possibility, and this was at 7:43 a.m. Pacific Standard Time. A little bit later, I shared that this is really doing well. The call is already up like 40% in its value, and then a little bit later at 8:08, right? I said, okay, so I bought it at 550 and I closed it at 8:30. So I, wanted to capture some profit at least on this trade. So that was a very nice trade just in a matter of like 30-45 minutes, right? And the reason this happened is because of the mechanics that I explained to you. That when you start seeing that relentless flow in options, there is no option, but the market maker is going to start buying stock in order to like hedge themselves or stay delta neutral, thereby causing a spike in the stock price, right? So I mentioned, like 55 is a possibility here, right? And we can go back and look at the chart as well right now, and it quickly hit 55, right? So after 55 was hit, I took some early profits, and as the stock retraced a little bit, I talked about like rolling it over, right? So I, rolled over, this was one trade, and then I said I'm going to roll it to July 9th, 60 strike price. And the reason I did that was because I continued to see buying on these 60 strike prices for 7 or 2 hours. I just gave myself a little bit of extra time. And what was the end result? Let's take a look at that. Now, as you can see, it closed at 55, and then of course it continued, to rise towards the end of the market and almost, hit close to $60. Now, whether this price will be, sustained over the weekend, how it opens on Monday is another story. But, this is something where the volume was in your favor. The buy signal was triggered right here, as you can see, and then you had option flow. So it gave you kind of like a perfect storm of what to trade. So when it comes to trading, you always need to realize that it's best to be patient, right? You don't need to, delve into multiple trades in a day, but wait for that one or two trades that give you the edge. Okay. Now we'll switch from SPCE to BABA, and I'm going to show you what happened in BABA when it came to the flow as well. So let's just like switch to BABA, and what do we notice here? What we noticed is that right off the bat, I saw like tons of calls being bought for 230, as you can see, again, targeting July 2nd as the date, right? So I mentioned again in the room here that there's awesome flow in BABA, right? So here's the flow in BABA that I saw, and I mentioned I'm going to take a long position in BABA following, and I took it further out, right? So even though they were targeting a short date, I took August 230 calls. Let's see what happened to the chart here, and so as you can see, again, the ultimate trading strategy hit a buy, and of course, since this was predicated for day trade, it closed or tells you to close at the end of the day. But since mine went into August, it didn't matter to me. So look at the spike, and this like made like excellent profits. I'm still in this trade, and we'll see whether there's a follow through on this on Monday or not. But hopefully this gives you a little bit of an idea why I sort of focused on these two stocks, and in a market where technology was generally down, right? You ended up still generating significant amount of profit with this trade. Now let's take a look at one final trade here, which is Expedia, and you will see what they were targeting here. So let's take a look at Expedia, and again, so this is something that's more a longer term. I've mentioned this, that when you see leaps, option flow that are predicated on leaps, then the likelihood of it moving a whole lot on the same day is not very high, right? It could, but since these are targeted for like Jan of 23, they gave themselves a lot of time. But look at this, they're targeting all the same strike price, 195 into July. So these are clearly not retailers buying this, right? Look at the amount of money: 1.1 million, half a million, half a million, 1.1 million, almost a million, another million. All of these are institutions that are investing, and they see something, but they obviously are giving themselves plenty of time for this trade to work out, right? So it's entirely possible, right? So this trade, for which they paid $23 or so, or $24, if it gets cut into half, maybe some of us who are actual traders may not want to assume that kind of loss, even though it's a paper loss, and because we probably have much shorter leeway into the stop loss that we want to maintain. But for them, they're clearly targeting a significant move in Expedia, and this probably makes sense because it's a reopening trade. As travel opens up and people start to go on vacation, this stock will benefit. So, but let's take a quick look at the chart as well, and get a sense of what happened on this one. And you can see this one's it did like spike because of all these options that were being bought. So you could take a little bit of an advantage. You could have taken a little bit of an advantage on this, but for most part, it ended up being more of a choppy trade, and it sort of went sideways. So I hope this tutorial gives you a little bit of an insight on how I use option flow, and if you want to incorporate option flow within your trading style methodology, you could either trade entirely on that, or you can make it additive, which is whatever you trade on based on technicals or other things. Just use that as yet another technique. The more data point you have, the better informed you are, right? So this is like essentially a giant puzzle, right? So obviously, remember, you're competing against some of the smartest guys, right, on Wall Street, with a lot of research and money power behind them, and then you've got all these smart algorithms, right? So even if you can't be that smart, but you can be just as disciplined, or if not more disciplined, in your approach to take the trades. And that discipline comes when you just follow a consistent methodology, especially when it comes to managing your risk, right? So as long as you manage your risk well, and you lose small, but but you can win big or win small, you'll always be on the positive side. So I hope you find this tutorial beneficial, and please leave me comments or what else you would like me to cover, and I'll do my best to do that in the future. Have a wonderful weekend. Bye-bye.